What's going on, everybody? Friday, yeah! Memorial Day weekend. And right on cue, it starts raining here in New York. So my Memorial Day is going to be a washout. I hope wherever it is that you are, you got some sunshine and some nice weather. All right, we had nice weather in the market this week. Strong. Hey, I talked about or mentioned the AAII weekly sentiment survey this week, where very high number of neutrals, people moving to the sidelines, people kind of confused, not certain about what's going on. That's, I like when whenever you get a concentration of sentiment in one particular area, whether it's bullish or bearish, or in this case neutrals, that's useful information. At some point, those neutrals, what's going to happen? They're going to be lured off the fence. They're going to be lured back into the market, either as short sellers if they're bearish, or what I think they're going to be lured into the market as the market trades to new highs. Don't forget, we still have very supportive fiscal, markets acting good, and we can get really a frenzy of buying at a significantly higher level when those neutrals say, hey man, we're throwing in the towel and we're getting back into this market. So that's something to keep an eye on. Let me talk a little bit about, this week. Again, a lot of hysteria, a lot of inflation talk again. We had a number today. It was like the strongest inflation in the April figures in 13 years. I think it was something like that. I will reiterate, every single commodity market is pricing in lower prices going out over the next 12 months. And I think I said this in a prior video, if it was one commodity, let's say it was oil, or let's say it was, sugar or something like that, you might say, well, that is related to the particular fundamentals of that market. But every single market is showing not just minor, but significant price declines over the next 12 months. These government numbers, they're the data releases. I mean, these things are lagging indicators. This is stuff that has happened. I mean, you got to look forward. You got to sort of fashion or understand what the outlook is going to be going forward. That's what the game is all about. I mean, I wish it was as easy as sitting back and waiting for old data to come out and saying, okay, that's what's going to happen. Unfortunately, it doesn't work that way. Doesn't work that way. That's why I think what I do with the fiscal flows, that is unique, because number one, it's real time, and number two, those are the things that drive the forward outlook, and those things are very steady and very predictable. We know what government is going to spend, from month to month. We know when fiscal is expanded and how that's going to flow through into payments and income, etc. So I mean, there's nothing more leading than that. Nobody concentrates on that. That's the only thing really that I look at. That's the core of the analysis. That's the basis, and it's right. I mean, that is the driver. I mean, you can equate it to physics. I mean, what drives a rocket? It's the thrust of that engine. What lifts up an airplane? It's the aerodynamics of the air flowing over the wing. It's science. This is science. I'm not looking 30 days behind or 1 quarter behind and saying, oh, that happened 3 months ago, so I think 6 months from now, such and such a thing is going to be. No, you can't do that. You can't do that. The other thing I want to talk about is all this hullabaloo about the Fed reverse repos. They're printing money. They're printing money, right? That's all you hear about. I did a thing yesterday. I said, I just wish one time that all these quacks and lunatics would get their story right about something, would understand one thing instead of this stupid, ridiculous, they're printing money all the time. Let me give you a little bit of advice, all right? Don't concentrate on short-term Fed monetary operations. They are meaningless in the big picture. They are inconsequential in the grand scheme of things. These are technical adjustments that the Fed does, whether they're necessary or not. They have very little long-term macroeconomic impact. In fact, they have zero long-term macroeconomic impact. I will repeat it once again for the umpteenth time. The Federal Reserve is a bank. It has three functions. It lends money against collateral. It regulates the financial markets and the banking sector. That's very important, and they're often, kind of lax in that responsibility. And it's a price setter by virtue of the fact that it sets interest rates, okay? They're not printing money. Treasuries are cash equivalents. When the Fed buys treasuries and injects reserves, it is swapping out one kind of cash for another. There is no net change in the amount of money in the system. Now, fiscal, that's different. If you get a Social Security check, that's yours to keep. It doesn't come with an offsetting liability. If you get a stimulus check, you put it in your bank, that's yours to keep. It doesn't come with an offsetting liability. That's money printing. And yeah, that has been happening, but it's been leading to economic growth. And economic growth does not necessarily and automatically, actually, it never equates to inflation. For inflation to happen, here we go again. Something has to be broken in the system, or there has to be a monopolistic force that has the ability to continue to set prices higher and higher and higher. In other words, what's a monopoly? A monopoly is one seller. And the seller has the power to set prices higher and higher, and whatever that seller is selling is very, very necessary. All right? So don't get all wrapped up in this inflation stuff. By the way, today with that 13-year high in that inflation report, it was like yawn, a big yawn for the bond market. We actually saw rates come down. We saw bond prices go up. That's what the bond market thought of that 13-year high in that inflation number. Now, insofar as Biden's infrastructure plan is concerned, well, look, he was going to get resistance from the Senate, Republicans in the Senate. Not a single Republican was going to support his agenda. We knew this, okay? It's going to be a struggle. Something will likely come out of that at some point. It would be fantastic just as a country to see our infrastructure repaired and rebuilt. I'm not even talking about the investment aspect of that or the implications for the market. I mean, me personally, as an American, I would love to see that happen. I mean, we're falling so way behind. But let me just state, I do not see that as something absolutely necessary to sustain the expansion in the economy or corporate profits, okay? Let me repeat. I do not see that as something absolutely necessary to sustain the expansion of the economy and corporate profits. The main thing that we got, hit with like a gut punch, like, practically a knockout, was the pandemic. And that is easing, and people are going back to work, and businesses are opening up again, and there's still plenty of fiscal left in the economy. And it's not going to be, as long as we don't hear these guys saying, hey, forget about the infrastructure, we're going to balance the budget now. And it's not even enough for them to say we're going to balance the budget. They actually have to enact policies that would lead in that direction. If that were to happen, I'd be the first one here to tell you, short everything. But that's not going to happen. So it's all good, folks. It's all good. So I hope you have a great Memorial Day weekend. Mine's going to be a big washout, a big rain out. If you're someplace sunny and nice and warm, I'm jealous. I'll be making my videos over the weekend. I'm going to have plenty of time to do that. Anyway, have a great rest of your Friday. And don't forget, go to my website, pitbulleconomics.com. If you like this, please click like and subscribe to my channel. And also check out my podcast. The link is in the description right here below. Have a good one, everybody. See you tomorrow. Bye.